what is trade? Trade at the end of the day is just an exchange of goods and services between a provider and a buyer. Why did you say a seller and a buyer? You see how there are so many stakeholders in a transaction, but when you be buying something, it's not from the seller itself. Let's say you're going onto one of those platforms like Alibaba or whatever, Amazon, etc. So you're going onto Amazon, but you're buying from another provider who himself or herself might be sourcing the goods somewhere else. So he's not really the seller, he's just being a connection between the source of the goods and you. But you see how these things work. And what is trade finance? So it's just money given by a financial institution. So I didn't say bank. So it can be an insurance company. There are so many things which exist today which provide trade financing. Just Google it. It's no longer a product specific to banks. It's a product which is available on the market through different types of banks or NBFIs. NBFIs meaning non-bank financial institutions. So it's money given by financial institution to have a provider or buyer as a result of an exchange or future exchange of goods or services between a provider and a buyer. Just have a look at this, this definition. You'll see when at the end of this presentation, you just read through this definition, you'll be able to see the products which can just connect to what has been said here. So an exchange or future exchange of goods, something will ring, it's a pre-shipment finance. It's money given, but it's an import loan, but could be an export discounting. An exchange and current exchange of goods right now. So that means you could be using a shipping guarantee, it's an exchange of goods, a shipping guarantee, so that you can get your goods at the port. At the end of this presentation, I hope that when you read this definition, you'll see you can see the products you can just connect to this. So in the boxes below, you see discounting, import loan, and factoring. So those are the kinds of instruments of methods which can create trade financing. So discounting is money which you are supposed to get in 90 days, which is received today. Of course, it's a discounted value. So let's say 100 rupees that you're supposed to receive in 90 days, it's going to be discounted at, let's say, 92 rupees. So an import loan is where you bought goods have been received, and you don't need to pay the seller right now. You apply for an import loan. The import loan is being given by a bank or whichever institution, and the bank pays the seller, and you're going to pay the bank in 90 days. So that means you have time to process the goods, to add value, to sell it again, and you have the money. It's always said that trade finance is self-liquidating. Self-liquidating means that what you buy creates value, you get the money, and you pay off the loan, sort of. And factoring this is for invoices. We're going to cover factoring in the following slides. So trade at the end of the day, you have home trade. You said earlier something in areas about wholesaler. You have wholesale trade, retail trade. Retail trade will be the shops, supermarkets and all. Wholesale trade will be bulk purchase. You have import trade, export trade, and entrepot trade. The entrepot trade is where the goods come from entrepot. It's a free port zone. It gets processed there, and it gets reshipped somewhere else. Now we've seen this trend, which is drop shipping. So you just stay at home, you have a good laptop or good PC, good connection, and you create your web page. People come onto your web page to buy something, and that thing they buy on your web page, you buy it somewhere else, and it gets shipped directly to them. So let's say in this kind of equation, you have A, which is the buyer, you have C, who's the seller, and you or B. A connects onto B, which is your platform, and your platform purchases the good and sends it right away to A. So you have minimum effort. Your margin is quite interesting because in terms of you don't need to have storage, insurance, whatever. You just need to have a right platform to be able to connect a buyer and a seller. And a nice interesting thing is what you can do also through, let's say, Amazon and Facebook.